Let me take this time to welcome all of you to our monetary policy announcement meeting. It's really good to have you. The Monetary Policy Committee of the Bank of Namibia met yesterday, the 9th of April, to deliberate on global, domestic, regional, economic, and financial developments. At this meeting, the Monetary Policy Committee of the bank left the repo rate unchanged at 6.75%. The MPC is of the view that at this rate, the monetary policy will continue to support the domestic economy while maintaining the one-on-one link between the Namibian dollar and the South African rand. Now, I have got two messages that I would like to share with you. The message that more or less give a summary on what is happening globally, as well as the message on the domestic economy. Once I give those messages, then I will start elaborating on the details. With regard to the global economy, we could say that the global economy during the fourth quarter of 2018 have slowed. Inflation in advanced economies and emerging market developing economies during February increased. Monetary policy stances in most of the key economies, whether emerging or developing, remain unchanged. Now, in terms of the detail of that, as I said, that the global economy slowed during the fourth quarter, mainly as a result of the slowdown in the emerging market developing economies. Going forward, we project that the global economy is going to register a weaker growth of around 3.3% in 2019 compared to the growth that we have seen in 2018 of 3.6%. This weaker growth that we are projecting for 2019 is largely because of the loss of momentum that we see in the global economy, particularly among the key emerging market developing economies and the advanced economy as well. Now, coming to the advanced economies, if you look into the category of the advanced economies, there are economies like the US and Japan that recorded a higher year-on-year GDP growth, while the economy like the Euro area and UK shows some kind of, they slowed during the same period, the quarter 4 of 2018. The advanced economy going forward, we are projecting them that the growth will be much lower. It's going to settle at around 1.8% in 2019 compared to the growth rate of 2.2% that we witnessed in 2018. Now, as I have just mentioned, that also growth in emerging market developing economies more or less also weakened during the same period in 2018, quarter 4, compared to quarter 4 of 2017. GDP growth in emerging market developing economies for the year 2019, it's likely to moderate to around 4.4% compared to the growth rate that we have seen last year of about 4.5%. Now, overall, global economy is likely to register a weaker growth, having given you the picture that both the emerging market developing economies and the advanced economies are slowing down. The global economy will register a weaker growth rate of around 3.3% in 2019 compared to the 3.6% that we have seen in 2018. Now, with that picture, of course, that we are projecting is still, those are still just projection, but the risk to the global economic growth remain and include, there are three risks that I will be pointing out to you. The first risk is the possible collapse of the trade negotiation between China and USA. Now, with that risk again, we are also afraid that there could be a possible escalation of trade tension that we see now between China and USA. We are afraid that that could possibly escalate to some other countries as well. So it is something that, it is not yet there, but it is something that we need to keep it on our radar, because if it happens, it's likely to upset the global economy. The last risk, the third one, is the possible no-deal withdrawal of the UK from the Brexit, from the European Union. It's also another risk that we need to monitor that is also likely to affect the global projection that we have just pointed out. On the domestic economy, the message is that domestic economic activity have slowed, especially during the first 2 months of the year 2019. Inflation during the same time also edged up. Private sector credit increased. The stock of international reserves remains sufficient to support the peg. As I have just pointed out, domestic economy have slowed mainly on account of some of the key sectors. For instance, mining have slowed during the first 2 months from the indicators, preliminary indicators that we have received. Agriculture also we see a slowdown, particularly looking at the number of livestock marketed, especially the cattle marketed, and also construction numbers do not really look good as well. Those are now the first, for the first 2 months. We don't know exactly how the picture is going to look like going forward, but we will be releasing, the economic outlook, I think, will speak more broadly on that. However, on the contrary, we see transport and communication, wholesale and retail, manufacturing, they slightly improve during the first 2 months of this year. Now, going forward, we project to record at least a marginally positive growth rate in 2019. I think at this point, I need to pause and to say that last time, we promised you that we will be releasing the outlook as quickly as possible, but we received some new numbers that we were busy revising. That outlook now, I will not be sharing it with you now, but we're gonna release it on the 15th of April, which is next Monday. So some of the numbers that I will be sharing with you here, or the direction, I will give you mainly the direction, but in terms of the magnitude, you will get the details of the magnitude of that direction will be well elaborated in the economic outlook report. The report will be available to you. We will also do a summary that will be circulated to the media. With regard to the inflation, what we see, inflation also during the first 2 months of this year have increased. We see inflation averaging around 4.6% compared to the same period of last year, where we saw the inflation averaging around 3.6%. The increase of this inflation is mainly on account of food and non-alcoholic beverages. That category has increased, as well as transport inflation. As I have just pointed out, that during the first 2 months, we saw inflation moderating in February, recording around 4.4% from the high level that was recorded in January of 4.7%. Overall, we see inflation settling at around 4.7% for the year 2019. With regard to the private sector credit, again, the period that we are indicating here is the first 2 months of the year. We see there is an improvement in private sector credit extension to around 6.3% compared to 5.7% of last year. This increase is mainly on account of increase in private sector credit extension that has been taken up by business, especially the utilization of the short-term credit facilities by some of the businesses. On the other hand, household credit slowed. If you take the first 2 months of the year, household credit slowed to around 6.5%. Compared to the level of last year that was recorded at 7.3%. With regard to the external sector, again, I think one need to emphasize that the stock of international reserves as of 31st of March 2019 increased to about 32.6 billion. If you convert that into the months of import cover, that will give you more or less a 4.3 months of import cover. That level, we see it to be quite sufficient to continue to support the PEC. Ladies and gentlemen, in summary, those are some of the key messages that I wanted to share with you. Elaboration is in the media statement circulation. I believe that you should have it now in front of you. And with this, I will stop here and open the floor for more questions and interaction. I thank you.
I'm Margaret Dunwe with the Southern Times. My first question is regarding the collapse of the China-US trade negotiations, as well as the no-deal withdrawal, the possible no-deal withdrawal of the UK. Just wanted to find out, in your opinion, what are some of the implications for Namibia, as well as probably the SADC? Number two, you also mentioned that the domestic economy is projected to record a marginally positive growth rate. Can you maybe elaborate on that? On the back of what? What is going to actually stimulate that?
Just a follow-up question on Margaret's questions. My name is Kevin. I'm now writing for the Patriot newspaper. Is there a need for Namibia to maybe start to prepare around renegotiation with Britain in terms of forward trade agreements in the event that there's a no-deal exit? Because as far as I'm concerned, South Africans are also pushing for a renegotiation, and there's a fear that if there's no deal and Britain is out of the EU, then it means that there's a possibility that there might be an influx of, what do they call it, the dumping of chicken, black chicken within the South African economy. Are we also thinking of that?
Very good. The first question by Margaret, I have pointed out on some of those three risks. So the question is that, what are the implications to Namibia? The issue of China-US trade negotiations, if they collapse, I think we know that China and USA are the two largest economies in the world. Now, if they are unable to agree amicably, that will introduce uncertainty and business confidence and investment possibly will be undermined. So going forward, if that happens, I think the global economy, it's likely to be affected. Again, I think on the issue of no deal withdrawal of UK from the European Union, again, it also introduces the issue of uncertainty and investment and labor. Of course, I think also you have got, if UK is part of the European Union, there is a full integration there, free movement of labor between within the union. Again, that will also bring a lot of uncertainty into the whole businesses. UK is not a small economy. I think it's possibly among the top 7 economy in the world. So again, if you take the combination of trade tension and no deal withdrawal of UK, these are the 3 economies that are in the top 7 layers where there are uncertainties. Certainly, I think these are the key risks that we need to monitor. That's why we are pointing them out. The other question is with regard to where do we see, I have not yet given the number, of course. As I said, that number will be given on Monday. But where is this positive growth coming from? Again, I think I have really been trying to qualify it to say that the positive growth that we see is still marginal. It is not really a growth that we can still celebrate. But of course, any positive sign or any positive growth is something to celebrate, especially when you are coming out of contraction. Now, why do we see that positive growth rate? We know that there are sectors that were contracting. The contraction of those sectors going forward, especially this year now going forward, it seems to appear to be much less than what we have seen in the past. And in addition to that, there are also some sectors that show some positive signs. For instance, wholesale and retail is one of the sectors, it's quite a big sector. Its contribution to the gross domestic product is quite big. Now, if you see wholesale and retail, it was in contraction. But the signs that we see now, even from the numbers that I have pointed out during the first 2 months, you see wholesale and retail somehow showing some kind of improvement. That combination of some sectors that are improving and some sectors that are coming out of the substantial contraction to a less contraction, if you put all those numbers together, that's why we are getting into the positive territory. Again, as I said, that it is too early to celebrate, but the signs are good that we are emerging out of that contraction into a positive territory. The other question, again, I think it's posed by Kevin, whether we should start negotiation with UK. Imagine we are part of Southern African Development Community. We are part of Southern African Customs Union. Now, when you have joined some of those setup, the regional setup, you don't just simply go on your own as a country to negotiate. It will make sense. It will also be more powerful, and you can have leverage in terms of your negotiation if you go as a bloc or as a group. And I believe at the level of the Minister of Trade and Industry and also the Minister of Finance, I think those negotiations possibly should be taking place to see at how best they can approach that if there is no deal Brexit.
My name is Joseph from One Africa TV. I would like to find out, I've been covering the monetary policy announcement for over a year now, and every single time it is always the repo rate is always remain the same. So what should the ordinary citizens take away from that, or what should they make of that?
Thank you very much, Joseph. I think that's a very good question. That when you take a policy, you also want to gauge what the people will say or what they think about. I think by us keeping the repo rate unchanged, what is going on in my mind I believe that the ordinary citizens and the Namibian public at large should be happy that we have kept the repo rate unchanged and we are not increasing, because once you keep the repo rate unchanged, it makes the cost of capital accessible and affordable to the majority of the people. As we know that still at this level, the interest rate is still low. If you were there, I always like to take people back to history, where we had interest rate prime ranging or hovering around 17%. And people used to borrow. I don't know how people used to afford at that point in time, whereas now prime is only slightly above 10. That time it was in double digits, 17, 18. That was the level. So if you are not a good borrower, maybe you appear to be riskier. So you were likely even to borrow at 20%. That was in 98. So at this level, we believe that the citizens should be happy and celebrate that we have kept the repo rate unchanged.
You seem not to be complaining about the borrowing rate, at the rate at which people are borrowing. Does that mean that you're satisfied at the trend at the moment?
Very good. I think the numbers are speaking for themselves. You remember at the time that we were complaining about one key component of the private sector credit, and that was installment. Installment during that time when we started complaining, I think at one point it went even very close up to 20%, very close to 20%. So we were worried that if that trend continues, a household is going to be heavily indebted. But now we don't see it as a problem anymore. So it has subsided quite substantially. And that's why you see overall private sector credit extension just hovering around single digit, around 6.3%, as I have just pointed it out here. So from our side, we are happy that the growth that we see, it doesn't really pose any risk from the fear that we had in terms of affecting reserves, etc.